Hi everyone, this is Mario, and in this video, I'm going to be talking about the secret to decoding global financial markets. So what really is the secret for you and I to decode global financial markets once and for all? Now, I've had my share of stories where people tell me, Mario, it's too difficult. I don't understand the charts. I don't understand the numbers, the trends, what the economists and all the analysts are saying. Well, here's the key thing, all right? Recently, billionaire Ray Dalio, who is the founder of the largest hedge fund in the world called Bridgewater Associates. Now this man, his personal net worth in 2018 is about 18 billion US dollars, and there's a reason why I'm bringing him up. Now, on LinkedIn in December 2018, I believe this was the last few days before 2018 was done, he wrote an article on LinkedIn, and this is exactly what he said, and I quote, "Since economies are the aggregates of the markets that make them up, to understand how economies work, one has to understand how markets work." And I couldn't be agreeing more. So let me break it down. How do we understand the global financial markets? Well, essentially, I just want you to be looking at three particular areas: stocks, bonds, and currencies. And without making any assumptions, let me give you a short definition of what they are. Let's talk about stocks first. Stocks or shares are basically an ownership in a company. They are traded on exchanges and they are collectively known as the stock markets. Now let's look at bonds. Bonds are essentially loans which governments or companies issue to attract capital from investors like you and I. The bonds are paid back with interest. Finally, let's look at currencies. Currencies, which are essentially termed as the foreign exchange market or the forex market, is today considered the largest financial market in the world. In fact, from recent estimates from BIS, which is the Bank for International Settlements, they're like the big brother major central bank throughout the entire world. Their recent estimates states that the forex market or the foreign exchange market trades an astounding 5.1 trillion US dollars in a single day. So these are the three main markets that I want you to be looking at as we start to decode the global financial market. All right, number one, stocks, number two, bonds, and number three, currencies. Now let's move on a little bit deeper. I'm sure you and I have heard or seen these words: the markets are going up or the markets are going down. The first thing I want you to know when you start seeing reports like that is that it's generally talking about the stock market. This is point one. Now let's go to point two, which is essentially more important. Markets are governed by emotions, and there are essentially two dominant emotions at two ends of the barometer. All right? The first dominant emotion is what I would term as fear and panic, and the opposite end of the bar is considered hope and greed. All right? I want you to remember these dominant emotions before I continue. All right? So it's fear and panic and hope and greed. Now, in the financial world, there are essentially two major categories. The first one is called the risk assets, and the second one is called the safe haven assets. Now, if you look at stocks, stocks belong to the risk assets. And if you look at in the safe haven assets, you would put bonds in that category. All right? Moving on, when the dominant emotion is fear and panic, money tends to move out of risk assets, in this term stocks, and it moves into safe havens like bonds. So in particular, stocks will fall and bonds will rise when the dominant emotion is fear and panic. Now on the opposite end, when the dominant emotion is hope and greed, money tends to move into risk assets like stocks, and it will move out of safe haven assets like bonds. In this particular example, stocks will rise and bonds will fall. Now, what about currencies? You see, even in the currency world, they are split into risk currencies and safe haven currencies. And I'll break it down for you right now. In the foreign exchange world, the risk currencies are the Aussie dollar, the Kiwi dollar, and the Canadian dollar. In terms of safe haven currencies, they are the US dollar and the Japanese yen. And here's how we link it together. In the markets, when the dominant emotion is fear and panic again, money tends to move out of risk currencies and it moves into safe haven currencies. So in this particular case, the Aussie dollar, the Kiwi dollar, and the Canadian dollar will drop, and the US dollar and Japanese yen will rise when the dominant emotion is fear and panic. Now, what about the opposite side? When the dominant emotion is hope and greed, money moves into risk currencies and out of safe haven currencies. So in this particular example, the Aussie, the Kiwi, and the Canadian dollar will rise, and the US dollar and the Japanese yen will drop when the dominant emotion is hope and greed. So I hope you get this video, and I really want you to understand this concept today, that markets are dominated by emotions and they move into either risk assets or safe haven assets all the time. In this short video, I really hope you finally learn how to decode the financial markets by understanding two main factors. Number one, it is dominated by emotions, and number two, money will always move into risk assets or safe haven assets all the time. This is Mario Singh signing off. I hope you enjoyed this video. I'll see you in the next one. Hi, thank you so much for watching this video. To get access to more high quality videos that's going to supercharge and fast track your business, do click on the subscribe button below. Also, don't forget to click the notification bell so that you'll be the first to know when I upload all these videos. I'll see you in the next video.